Hey everyone, welcome back to Corporate Decoder, a place where we dig into the nitty-gritty of corporate filing so you don't have to. And today we're unraveling a fascinating deal from Wellgistics Health, Incorporated that smells of innovation and a hefty price tag. Before we dive in, if you like getting these unvarnished corporate truths, make sure you are subscribed. Also, we have a fantastic community Discord server linked in the description down below where we discuss these filings and more. So, what is the big news Wellgistics Health is dropping on the 24th of November 2025? They've inked a deal that could seriously shake up how prescription drugs get from the manufacturer all the way to patients. This report filed with the SEC is all about a new agreement Wellgistics Health has made. They're looking to use some fancy new technology to make their entire system for handling prescription drugs, from the factory to your pharmacy, way more efficient. They're calling their initiative PharmacyChain. Now let's talk about the price of this technological wizardry. Wellgistics Health is paying a significant chunk of change, $2.5 million as a license fee to Datavault Inc. This isn't money they're getting back. It is a straight up payment for the rights to use Datavault's intellectual property which will power their PharmacyChain. And they need to get this payment done by the end of this year, the 31st of December 2025. But the cost doesn't stop there. On top of that upfront fee, Wellgistics Health will also be paying Datavault a royalty. This royalty is a percentage of the profits Wellgistics Health makes from using this new technology. Specifically, it is 13% of all the net profit they generate from this PharmacyChain initiative. They're committed to paying these royalties monthly. Things get really interesting when we look at the minimum royalty payments. Starting in 2028, Wellgistics Health has to pay at least $1 million every year. However, there is a catch for the first couple of years, 2028 and 2029. They only have to hit that $1 million minimum if they actually make at least $2 million in net profit that year from PharmacyChain. This is a smart way for Wellgistics Health to manage their risk initially. If the technology doesn't perform as expected, their royalty obligation is tied to their actual earnings. And here's another twist. Wellgistics Health can also essentially rent out this technology to other companies, a process called sublicensing. But if they do that, they have to give a whopping 90% of the revenue they make from those sublicenses back to Datavault. So while Wellgistics Health gets to expand the reach of the technology, Datavault gets a massive slice of any secondary deals. Now, the report also includes some standard checkboxes, indicating if this filing is meant to cover other types of communications like marketing materials or solicitations. In this case, none of those extra boxes are checked, so this report is purely about official corporate business. We also see a mention of their common stock. This is the basic ownership stake in Wellgistics Health Incorporated. It has a very small par value, which is just a nominal amount assigned to the stock, and it is traded on the Nasdaq Capital Market LLC under the ticker symbol WGRX. The company is also identifying itself as an emerging growth company, and they've chosen not to use any extended deadlines for adopting new accounting rules. This means they're likely keeping pace with the latest accounting standards, which can be a good sign for transparency. Following up on this license agreement, Wellgistics Health issued a press release on the 25th of November, the day after this report was dated. These press releases are often used to announce significant news to the public and investors. And as is common with these announcements, the press release includes forward-looking statements. These are basically educated guesses about the future performance and prospects of the company. They use words like hopes, plans, and will to talk about potential outcomes. However, they also caution that real results could be very different due to various risks and uncertainties. Many of which are detailed in their previous filings with the SEC. They make it very clear that these are projections, not guarantees. The full details of this big license deal are attached as Exhibit 10.1. This is the actual legal document spelling out all the terms and conditions between Wellgistics Health and Datavault. It is the source of truth for everything we've discussed, so anyone wanting to get into the nitty-gritty legal aspects would look here. Then, Exhibit 99.1 is the press release itself, giving you the company's official public announcement of this agreement. And finally, Exhibit 104 is a special format called Inline XBRL, which makes financial data from the report easily searchable and analyzable by computers. It is all about making corporate information more accessible. The report is signed off on the 25th of November 2025 by Prashant Patel, who holds the title of President at Wellgistics Health Incorporated. Alright, let's break this down. Wellgistics Health is making a significant bet, spending $2.5 million up front and committing to ongoing royalties to license technology that aims to revolutionize their prescription drug supply chain. The PharmacyChain initiative sounds ambitious, using blockchain for smart contracts to optimize distribution. This is a bold move, especially for a company that identifies as an emerging growth company. They're clearly aiming for a substantial competitive advantage and potential for significant expansion, including sublicensing opportunities where they'd retain a smaller, but still significant portion of the profits. The risk here is evident in how the royalties are structured. While there is a potentially high revenue share for DataVault on sublicenses, the minimum annual royalty for Wellgistics Health is tied to profitability, making it somewhat more manageable if the PharmacyChain doesn't immediately take off. The staggered introduction of the $1 million minimum royalty with conditions for the first 2 years shows a degree of strategic financial planning from Wellgistics Health. The company seems to be positioning itself for future growth and efficiency. However, the success of this venture hinges entirely on the effectiveness and adoption of this blockchain-enabled technology in a complex and regulated industry. The reliance on intellectual property from DataVault means their future is also somewhat tied to DataVault's patents and ongoing innovation. In conclusion, Wellgistics Health is making a substantial investment in a technological overhaul. The potential rewards in terms of efficiency and market position could be huge. But the upfront cost and ongoing royalty payments represent significant financial commitments. They're betting on innovation to drive their business forward, and investors will be watching closely to see if PharmacyChain delivers on its promise. That is our deep dive into Wellgistics Health's latest filing. What are your thoughts on this big tech investment? Do you think PharmacyChain will be a game changer? Let us know in the comments below. If you found this analysis helpful, please hit that like button, subscribe for more corporate breakdowns, and don't forget to join our Discord community linked in the description. Thanks for watching, and we'll see you in the next one.